GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to the weekly webinar. Well, once again, I've got to start off by mentioning dollar yen. This thing is absolutely exploding to the upside now. Easy 6-year highs, and we're pushing into the 125 mark as I record this webinar. So massive dollar strength going on there. We're actually seeing dollar strength creeping back in against the pound and the euro too. Those pairs are both rolling over. And likewise seeing similar kind of bearish looking action with some failed breakouts in gold and silver. So looks like we're teeing up for a strong dollar week. That potentially makes sense depending on how non-farm payrolls go on Friday. And obviously the dollar's a bit of a haven. So if things do turn awry, then that's obviously part of it. What triggered the massive weakness in the yen at the start of the new week was some dovish policy plans from the Bank of Japan. They basically opened up the idea of unlimited QE, unlimited bond buying, which is obviously pretty mad in the context of all the other central banks looking to now raise interest rates to combat higher inflation. The Bank of Japan just doing something completely opposite, and hence that policy divergence is causing massive weakness in the yen versus strength in the dollar. It's been a couple of good weeks for stock markets, so still an open question whether this is a dead cat bounce or whether it's a bear market rally. But for the time being, stocks looking strong. I'll cover all this in more detail coming up. If there's anything else you'd like us to cover in these videos, please just drop us a comment and we'll be happily do that for you. All right, thanks everyone. Let's get on with it. Let's start with the Forex market. So starting here on this weekly chart with dollar yen, in the euro dollar, we can see it's a downtrend, but obviously it's been making high highs and lows. But more recently, we can see that the momentum has slowed right up, right? So we're going through, and you can see that also through the price action. We've not gone anywhere in the last 3 weeks. Massive bearish action, still a downtrend, potentially a consolidation within a downtrend. Well, that's what it is, a consolidation within a downtrend, but we don't quite yet know whether it's just a bounce or whether the low is coming in. So if we drop down to our trading time frames, start with the daily, you can see what's happened here as we bounced up to the previous support, which has acted as resistance twice. We've now fallen below this rising trend line. It's not the most solid trend line ever. Only had the 2 touches. Nonetheless, we have drifted below it. And then on the 4-hour chart, you can kind of see where the highs and lows. We've drifted from a position of here. We made that initial low after the big sell-off, rallied up, came back, tested that same low for a second time. We made up, but we just didn't quite make it past this same resistance again. So this was a bit of a triangle pattern, and we basically fallen out the bottom of the triangle, but then we didn't go anywhere. And you can see that we've just been drifting, going sideways. We've had a break lower, but that's proven to be a false break for the time being. So maybe this was the bullish trigger we need. We tried to get lower, but a lot of buying came in seemingly. So potentially a bottom coming in here. You've got to say, and we've got matching lows on the RSI. So there's a few things, this last bullish candlestick is encouraging because you'd want to see some follow through straight away, but we came right back into the trading range. But overall, the trend is down, right? So the bias is probably still to the downside. So still looking for kind of bounces to sell into at this stage, but it just looks in the very near term, looks like we don't quite have the momentum to turn to the downside. So basically watching the bottom of this range, if we actually do roll through here, and this was just a blip, and we take out this support on the RSI, then that's pretty good confirmation this broader downtrend has continued. We've topped out again, and we're turning lower. If we break through the top of this trading range, then obviously prices will be higher by then. Buying down here at the bottom of the range would give you a better risk to reward, but you'll have greater confirmation that the trend is turning around if we get a break through the top side about 110.40. Moving swiftly on to the British pound. you can see that similar price action where we broke to the downside but then closed up, but now we're rolling over pretty big in terms of the British pound, and you can see we were forming higher highs and higher lows, but we came back to these two lows here. We couldn't break through that as resistance. I think I mentioned that last week. A little false break, turned lower, and now the most recent support we seem to be breaking down from. So and obviously the price is now back below the 50-day moving average, having never made it to the 200-day moving average. So pound looking pretty bearish at the moment, and you can see some confirmation down here on the 50. The fact that we bounced from below the 50 level, we got that nice little bounce up there, but then we came straight back to it again, and we've been jiggling around. Now looks like some momentum's really rolling over below the 50 mark and below the 50 DMA. Sort of the two often work in sync, and the 50 period moving average and the 50 level demarking up versus down trend momentum, both pointing down for the time being. We do have a next level of support down here, which is what we're testing at the moment. So that appears to be what drove this initial leg up, but now we're back down there again. The overall trend is down. We've failed to get overbought. We failed to get to the 200 DMA. We're rolling over through low. We're making lower lows. To me, it all speaks of this correction up in the pound pretty much being over, and it looks at the moment like we're going to have another test of below the 130 mark down here. Dollar yen. So this is a monthly chart, just to give us some context about how epic these price levels are. We only had that one brief period. Oh, I've lost that line. Oh, this one's orange. Anyway, you can see obviously the multiple tests of this area starting back here, and I think that one was at 2014. Oh my god, that starting back in 1999, we had that brief break to the top side in the year 2000, and then we've been below this resistance ever since, which is pretty epic. So, and now we're probing up to this resistance again. So given the momentum that took us into it, wouldn't be surprised to take a bit of a breather around here at some point in terms of short-term trading action. You could take a little speculative move to the downside, expecting this long-term resistance to work. But this looks like this level's going to break. I mean, this is massive momentum, and the fundamentals are there to justify it. It does look like we're going to break to the top side, and at this stage, it looks like we're going to test 130. Which will be, again, the first time having done so since the year 2002 was the last time we were up at 130. So, moving down to the lower time frame, let's zoom in a little bit. You can see the epicness of this trend, but it's been working out pretty neatly technically, which is what the kind of things that we look for in terms of entry opportunities that we've been highlighting since the breakout, which is there's the highs, we get the breakout, we get the pullback to the highs, accelerate, get the breakout through the high, very minor flat little pullback, accelerate, get the breakout, pullback towards the low, then we get a breakout again, then a dip back to the high. So the resistance turns to support, resistance to support, resistance to support. And now obviously this was resistance, and we've broken up big time to the upside. Now I'm not sure if we get back to down to here again. It's going to be more of an example like this, where we explode to the top side, have some kind of consolidation, and either roll over because it's major resistance, or we just do another one where we consolidate and then break to the top side again. But where did we have hit 125. So there you go. So obviously 125, a big level. We've already had a little bit of a profit taking move to take us down to 124.40, 60 pips off the high. That could extend a bit further. we could take a fib and guesstimate how far that might go. But I wouldn't be surprised to see us push up through 125 in pretty short order. If we were to have a 50% pullback, that would take us down to 123.60. So another 100 pips potentially to the downside if we were going to have a 50% pullback. And then 61.8 is down at 123.30-ish. But given the extent of this momentum, it would be, unless this is the top, which it could be at this resistance, you wouldn't expect it to go much below the 61.8 before rallying up again. So great uptrend to be involved with here. Obviously, try and buy in weakness, but the timing doesn't matter so much when the trend is so clear. Better just to be involved. Let's switch over to the metals markets. And actually, what I highlighted last week has played out pretty neatly. So, the thought process was last week, bearish follow through. Okay, but we don't want to be selling down here. So wait for a bounce back up towards this resistance and then look for some selling to take place there. And that's pretty much what we've got. So seeing it in a bit more detail, here's the breakdown. Here's the little recovery move up. And from the daily chart, you would sort of think, well, why would it stop here? But from that longer term perspective, we know it's because of these old highs. That's why it stopped there. And that's why at the moment it stopped there, paused there for the next candle, for the next day, and now we're seeing the bearish rollover. And it looks to me like this could be a bit of a rough patch coming up for gold and probably silver too. Got this little short-term trend line. If you want a bit more confirmation, maybe we're going to get a bit of a bounce off here, so you might have another bite of the cherry. Let's have a look at the 4-hour chart to see a bit more detail. So you might, given that we're just bouncing off this level now, if you're a bull, I mean this is pretty good. We're bouncing off this trend line and the 200 period moving average. Or if you're a bear and you don't want to be, you want another bite of the cherry of selling up in this zone, well, we might get a bounce off this rising trend line, and then I suspect it gives way. That's what the longer term picture tells me, is that we're about to give way. That this was a big sell-off. This was the kind of consolidation, just slight recovery, take a breather period, where we drifted slightly higher but without any real momentum, and then the momentum's kicking into the downside again now. That's what it seems like to me. If we get a tidy bounce off this trend line and start pushing through this area, then obviously you're wrong, and you can start positioning for a breakout through the top side of this here and in more bullish action. To me, it looks bearish at the moment. Let's switch over to silver, and we can see, that green is a bit ugly. Apologies for that. I'll try and change that. But then let's have a look at the higher time frame. So we talked before about this kind of false breakout. Pretty similar situation. If you look at what's happening around the resistance on the higher time frame, sold off, managed to get the breakout, but sold off from the high again. Sold down, bounced up to the line. Intraday got above it, but actually closed the week pretty much at that old weekly high, and then we sold down again. We closed the week there, and now we're selling off from that level. So not a done deal at this stage. Silver actually looks slightly better than gold, and we're above the 50 level. So this could just be a consolidation where there was some profit taking, some kind of selling the breakout kind of behavior going on up here, and we're just consolidating before we really actually do accelerate to the top side. That's possible, but given how gold looks, it looks to me like tried to get up, got hammered down, tried to get up, getting hammered down. And the confirmation, this looks, the fact that we basically struggled to maintain above this high. We got above it, dropped back through it, almost sold off, then had a false breakout through it, and now selling off again. To me, it looks like we're going to take out this support, but that's what I'm going to say is this resistance turned to support here. That would be the bearish confirmation that we're in like a new downtrending territory. These are obviously just the better price levels before it gets confirmed. Alrighty, let's move on to oil, which Actually, you know, last week the view that I took was that it was a bit hard to read oil, and that probably after such an epic rally up and then such an epic crash, that probably like we're going to lose a bit of direction from the market. And naturally, some buyers came in at the 50 DMA and pushed the price up, but now we're stalling again. And we even if we go further higher, I just sort of think we're going to be in a range where we kind of dip above and below 100, and probably this is probably the near-term high, and probably from what I can see at the current action, you know, this low down here, maybe a bit lower, something like that, chopping around 100. Maybe it doesn't even get to that low. Maybe it just gets that to the 50 DMA again, but it just kind of goes sideways. This just seems like a blow off top, sell down, and then kind of chop, and maybe it does blow out. I mean, I certainly hope from a driving perspective that it doesn't rally to the top side, but from a trading perspective, well, it's been a great trend. So a good way to hedge the cost of driving if you're getting long this market. Let's drop down to the 4-hour time frame. You can see that we are putting in a head and shoulders pattern here. So this is the neckline of the pattern. There's the left shoulder, there's the right, there's the head, there's the right shoulder. So a breakdown through basically, what is that, 107 would be a confirmation of the head and shoulders pattern. And I think that would probably just take us back below 100 again if that were to come off. Maybe the support holds. It's the third test at the moment, and certainly 107 could hold again. And then we'd be looking for some, you know, bigger move to the top side. But sort of looks like the picture from the other markets that we can see is a strong dollar and weaker commodities. And I think probably after this nice little kind of recovery rally, we're going to roll over a bit towards 100. Is my best guesstimate, and a little bit of support for that idea is we've already seen it play out a bit, whereas there was the higher high, there was the lower high in the RSI, so obviously bearish divergence, and we did see the price sell off already. So come down to the 50 level, tried the bounce off the 50 level, hit the same height as the left shoulder, formed a new right shoulder, and dropped below the 50 level. Ahead of the drop below the 50 DMA. So I think probably a good idea, a good forward-looking bit of information here that we're below the 50 in the RSI and in a more kind of downtrendy period coming up. Moving on to stock markets. This chart looks a bit busy and ugly. I apologize for that. Probably too many lines going on. But what I wanted to point out is this is obviously the all-time high. This is the crash. This is the kind of recovery, second crash. And obviously we've been saying for the last few weeks, well, we've not been taking out the low. So actually there's a good chance of a decent rally. Now we have rallied up. We've rallied to perfectly 61.8%. That's where, so we just took out these recent highs, popped up to here, but we just stalled right at 61.8, which is interesting. You might think, well, maybe stock markets don't pay attention to Fibonacci's, but let's have a look at this. Well, that was that sell-off, the first sell-off, and where did it top out? The 61.8. So there's the 61.8 of the entire thing. If we're going from just this latest drop, then obviously it might just go fully to 100. We stalled a bit at 76. We stalled a bit at 61. We stalled a bit at 76. We maybe will just go right up to 100. So this is a possibility. So what would I say here? I'm not fully convinced that this sell-off is done. We have had an A, B, C, and so maybe we are due like a kind of 1, 2, 3, 4, 5, something or other to take us higher. You know, certainly if we drop down to our 4-hour chart, I think the trend is up, and so that's how you want to be viewing things. Broke this resistance, rallied up, pulled back to just shy of the resistance. So if you were waiting for just on the line, you missed it with that one, but you can see the idea. Rallied up, came back through the resistance, so not so strong, but held on to these lows through here. Rallied up again, broke out, dipped through temporarily, but we're holding that resistance for now. So pointing towards higher prices, right? We're at 4,540, so 4,600 is the big next round number. If this 61.8 does give way, we're probably heading to the next couple of round numbers. So yeah, trend higher, but just interesting, the fib level. If we do start to get some, if we close Monday significantly lower, then that kind of tells you that maybe that 61.8 is going to work for a deeper sell-off. Moving over to Bitcoin, which I didn't mention in the intro, but actually a big breakout move happening in Bitcoin. We're up at the highest level. We've been at 47,000 since January, actually, since just the first few days of the year. So we're at 3-month highs here in Bitcoin. So that's normally encouraging. So this, not only is it the range resistance, is also the 200 DMA that we're breaking above. So we gapped up. You can see on the daily chart over the weekend, on Sunday, we gapped up higher to open better on Monday. And all we really need is just for Monday to close above the old range resistance, and this breakout will be confirmed. That doesn't guarantee higher prices, but it certainly helps the prospect for it. If we sell off back into the range, I think that would be very bearish. That would be about as bearish as we can get, because bulls would have tried the breakout and failed. And then that means, well, okay, if the bulls aren't winning, that means the bears are winning, right? So then that means that we probably would be looking at, so this trend line, we had this drawn in last week down here, and it's just kept working, which has been very nice. Neat trend line, and we've obviously accelerated off that trend line with a gap higher. You can see better here on the 4-hour chart. If we roll over, fill this gap, okay, we may bounce off the trend line and carry high, but I suspect we'd break the trend line and we'd be headed much lower. I think we do need to stay above this range resistance now that we've moved above it, and if we don't, I think that's troublesome. But let's see. So that's all the markets we're looking at today. I hope that was helpful. Good luck trading this week, and make sure to subscribe to the channel so you don't miss these videos as soon as they come out. Thanks, everyone. Good luck trading again this week.